Aloha everyone, Joshua Hayes at BigWaveTrading.com. Hope you are having a lovely weekend. The stock market, the sell-off finally started on Wednesday, finally started to pick up a little steam on Friday, and overall, while volume was heavier and it was a technical distribution day, intraday, the price action was pretty good. It was contained tight range on the S&P 500, Dow Jones Industrial Average. You can see the nice intraday reversal. NASDAQ, even though there wasn't quite the same intraday reversal, you can still see that overall pretty solid session. You can see that it closed higher than where it opened, so that's pretty good day on a pullback. And the IWM, the Russell 2000, led the way, only down 0.28% on heavier volume. It's a distribution day, but it's healthy. And so far, since I complained about the V-shaped rally on Tuesday, the majority of the market has been pulling back properly, even with the distribution day on Friday on heavier volume and the larger percent gain. The intraday action overall was healthy. The NASDAQ finally pulled back, but once again, guys, those V-shaped moves, you know what I mean? Think about how lame they moved each of those sessions, and then how much Friday session, how it just destroyed the previous 3 days up day. So the small percentage changes, the lower volume drifting, that was the problem. It went on a couple of days too long. I thought the selling would start on Monday immediately. Took a little while, but at least it's here. So far orderly, so far contained. I really have no complaints about that. So with that being said, is the selling over? I don't know. Market's still overall in an uptrend, so I'm going to continue to take small, measured, long positions with small amounts of my capital overall, unless the pattern is better. You can see Etsy told everybody that this is a very good chart pattern, a chart pattern I like a lot. Now, if BOP's going the other way, if volume is huge on this day, I actually really like this pattern. And if BOP is green, this entire area, and there's more accumulation bars in here, I love this pattern. But in this market, I can only really like something. This was the first stock I only slightly too, increased my size on as a new long position during this entire rough period that we've been going on the past month because of the quality of the setup. Now, very few long positions have been like that recently, but the mere fact that they are still there and they're setting up, and I still have a lot of stocks hitting new highs. I mean, you see CDNA, Cassie, these are all stocks that I'm long. You know, as long as I got stocks acting like this, it's kind of hard to be too bearish on the market. But that being said, we're in a seasonally bad period of time. I want to tread cautiously. And on that note, you know, if you're looking for a bottom, there's still indications that there's a way to go. Short term, the VIX did jump a little bit on Friday after indicating that market was about to turn on Thursday, with it moving higher, with some of the indexes being up on the day, like the NASDAQ. And as you can see, the VIX finally followed through on Friday. But the put-call ratio, that hit up to 1.11. That's the highest since April. But still, it's not above that 1.2 mark where I start to really think that, oh, a turn's coming. Then the AAII bulls are more than the bears. The II bulls are more than the bears. The NAAIM exposure index actually, I believe, went up to 87%, if I can remember correctly. And the CNN Green and Fear Index, I think, is still at a greedy 60. I've seen this thing at 1 before. You know, so I mean, it's just not quite there yet. But at the same time, if we can get through August and September with a contained pullback, we should be good. So now with that out of the way, the intraday stop showing how pretty much orderly the session was. Etsy and ADOM filled, as they thankfully should have. But as you can see, profit stop, profit stop, profit stop, profit stop, small sell stop, small sell stop, profit stop, small sell stop, profit stop, small sell stop, profit stop, profit stop, small sell stop, profit stop. The majority profit stops over sell stops, and there weren't that many trades whatsoever on Friday. So just think about how I've complained lately, how many stops have triggered on up days and then days where we're flat, and I'm like, oh my God, look at all the stops that triggered. And now look at Friday, a day where the market actually pulls back hard. I barely have any stops trigger. So this is how it's supposed to happen in a healthy market. So we finally had a healthy pullback in a more orderly market. This is going to happen. As you can see, there were only 2 stocks that went on the short sale restrictions. Before, there's been a ton. So, you know, things are hopefully going to be more contained and orderly from here on out as we work ourselves out of earnings season and the very, very small cap and micro caps to start giving earnings. Now to the sell signals. CEIX is a 50%er. It closed below the 50-day, its 20-day moving average and below the signal date's low a day on above average volume while losing green bop. It is not a full sell signal because of the intraday reversal and the close being higher than where it opened. Had it closed near its lows, that would have been a full sell signal for me. But with it still holding above this low day right here, I'm still carrying it on my end and on an end of day basis still tracking it. FSP is closing below its 50-day moving average, and it's I wrote it down here somewhere, 719 low a day on heavier volume, so that's a 50% sell signal. 50% goes here, and I believe I have I think it's 25% here and 25% here. Don't hold me to it. I don't have a big position in FSP, so I really don't care. Hele, 50% sell signal below the 20-day moving average and before it's below its 8-1 low a day on heavier volume while losing bop going more negative, I should say, after losing green bop. It's still above this low a day here, but that now should be your final sell stop. I kept that pretty tight sell stop, and that was my only sell stop, 110, and as you can see, intraday went below 110. So I no longer have a position in HELE. I would if it would have kept green bop, but once it lost green bop, I consolidated my stop to that low of day. FNJN clear cut, closing below the 50-day moving average on heavier volume, 50% sell signal. EMX clear cut, closing below the 20-day moving average on above average volume, 50% sell signal. And TPIC, another 50% sell signal below the 50-day moving average, still holding above this low a day, preventing a 100% sell signal. When it closes below this low, that next close will be the final cut loss on that. Full sell signals, there were only two. ESQ. ESQ is a 100% sell signal, and I know some of you might be like, well, it's closing above these lows, so why is it a full sell signal? Well, the price velocity drop, it's basically rolled over. You got 1, 2, 3, basically 4 lower highs, and now you have 1, 2, 3, 4 intraday lower lows. That's just way too many on this chart. So on a closing basis, while it's not there yet, it's close enough. That bar is ugly. That red volume is ugly, and that bar right there on BOP went to max red. So this is just a chart I would no longer want to be long. So it's a 100% sell signal end of day basis. And then DFBG failed, rolling completely over, closing below these lows and these lows. So it's a 100% sell signal for DFBG. And now that leads us to our new long positions. There are 4 of them. Quote, quote, quality long positions. You will notice on the new positions page, they are all only going to be 0.5% of my account capital, not 1%, not 5%, not 10%, not 20%, 0.5%. You will also notice that they do not look like Etsy. Look at Etsy. Look where Etsy is compared to its 50-day moving average, for instance. Now let's look at our new long signals. SSD, EHTH, MJCO, LBY. Are any of them there near the 50-day moving average? Sure doesn't look like it. And then we can even get more closer. The main reason for their low asset allocation is that, look, let's take a look. Pay attention to that magenta line. SSD, well extended from it. EHTH, barely extended from it, but still extended from it. MJCO, extended from that one and the 10-day moving average, the white line. LBY extended from the 20-day moving average. So all of these are extended. All of these are risky. They're all extended from the 20. They're all extended from their 50. Only EHTH is close to the 20 and 50. So only EHTH could even be considered remotely safe. So with that one, limit order 2531, your first cut loss level could be there at 2458, then 2421, then 2284, and then 2228. You could use all 4 stops for EHTH. This is probably the only quote safe trade. Now SSD, highest quality trade probably overall, can some quality. As long as you use the first stop, you should be okay. 7271 limit order, 7133 my first stop, and for now it's a very dynamic final stop, 66.99. But it loses green bop, pulls back on heavier volume. Obviously it'll become 50-50, 100 something, but that final stop should never ever come into play. Only if there's an intraday panic will that thing ever come into play. MJCO, this is the most risky one, but once again, if it's in my BOP scan, if it's in my perfect speculator scan, if it has big recent earnings and sales growth, and I can understand why the price is rocketing higher, and it then makes both of my green BOP scans, it's always going to be a new long, no matter how extended it is, and I'll just give it room to work. So that's the theory behind MJCO. Limit order 885, first cut loss level 860. Our first cut loss level 860, final cut loss level 781, and I'm willing to just give this a lot of room to work. I might even get super cute with it and go 1, 2, 3, 4 with my stops, just because I understand what I'm doing. But if you take this as a new long position, keep it even small. Keep it as small as you can. And if it closes below 860, you got to start getting out. And if it closes below 860 before closing below 781, you got to start consolidating stops. And then the last long signal, LBY, perfect speculator quality again. Once again, all of these are perfect speculator quality, but SSD, that's CanSlim, that candle over candle hammer. I made my max green BOP scan, so that made it a good long, since it's an earnings winner. It's in my perfect speculator scan, and it made one of my green BOP scans. So that's why I'm going to take it. Limit order LBY 1064, first cut loss 1008, and then you could even have a second cut loss here at 956. And out of full fair disclosure, I'll probably have 25% there, 25% there, 25% there initially, and 25% below 735. However, the 50 and final loss should never come into play. I just want to give these stocks room to potentially work if they do happen to consolidate sideways while keeping green BOP and getting accumulation in that base. If they don't, I'll cut them and get rid of them, because they certainly don't look like Etsy. All right, everyone, have a great rest of your weekend. I will see you in the chat room on Monday. Aloha.